every last dollar they can get. And it changes by the environment. We have different competitors in South America than we have in Canada. So we need to be very flexible and diverse. We've quadrupled the resources in this market to help grow it. So we are serious about it. We've tied our promotions. You'll hear about other investments we're making here. The biggest message I think I can deliver here is this isn't, and I said it earlier, just about small business. Yes, we do a lot of sales today in the sub 50, sub 100 market. But when I look at the common ingredient in partners that are succeeding and growing this in triple digits, it's because they've moved up market. They're focusing on the 500 seat to 2,000 seat mid-market opportunity, and they're winning. And the deals aren't 10 or 15K, they're 500K, they're 700K. And that's having a meaningful impact on their ability to grow. And we need more of that to happen. The suite is expansive today. It isn't just about UC. Contact center products that are there for both the small and medium-sized contact centers, and differentiated feature sets that we could use. And again, Chris will talk about this in more length. But one point I want to make here in terms of what your call to action is this is where our investments are going. We're putting our MDF dollars here, and I'll talk more about that. Our grow right incentives are into this market. So your profitability and how you are rewarded with Avaya will be heavily concentrated on your strategy, your investment, and your execution in this very critical market space. But let me talk a little bit about the second category and how we really want to tie this back into the profitability. It's a key part of every channel strategy, and definitely one in ours, that we want to financially reward you for committing to us, but also performing with us. I want to make these incentives material. Handing you a small check is meaningless when you've got other vendors vying for your mind share. So I want to make sure that you're seeing the biggest benefits. And as a result, we're making some changes to Grow Right, positive changes. I know in the past, and one thing that I committed to was to not have this program start and stop, run from Q1 to Q3 and then shut down for Q4 or into Q1. This is going to run now as long as it's continuing to deliver the results it is. We're changing a couple of things in the program that I think you'll find very positive. We're putting in medal level distinction. So today, all partners who participate in this program are eligible for a 20% rebate in terms of their strategic product sales. And by the way, those strategic product sales also include a lot of the platform business that Gary's going to talk about. It's not just on networking mid-market. Applications are included in it as well. The medal status changes we're making is from 20, if you are a platinum partner, we're increasing that to 30% potential rebate. If you're gold, you'll stay at the 20% we're at today. And if you're a silver, you're going to drop down to 10%. But we're doing that to give you the motivation to go and pick up one more solution specialization, and you'll get right back to where you were. And in fact, if you pick up two, you'll be at the 30%, which is one of the highest performance rebates in the industry. I've also looked at all the detail of how our partners are performing here. And I've noticed that quite a few of you are capping out at the 150K in the US, or the 50K in Canada, and the 30K in Central and South America. And that frustrates me, because I know what's going on in your minds. You're thinking, well, why sell any more this quarter? We'll just wait until next quarter when my rebate product calculations start all over again. So we're going to put a stop to that. We're going to increase the cap to 200K, and if people hit that, then we'll go to 250K. But I want you to make sure that this program drives your behavior, it rewards you handsomely, and I'm trusting you're all going to consider this to be good news. Thank you. Make the money. We want to give it to you here. The same approach for MDF. We put a considerable amount of money into developing markets with you, our partners. But, well, I'll also be honest, we've shifted those dollars, and for some of you, you've seen less dollars from Avaya. It isn't because we've cut our budget. It isn't because we're investing less in our partner community. It's because we're making a material shift to invest and align our dollars where we need to see the growth. Not just where we would like to, but where we need to. If I look at my MDF spend, we moved an increase of dollars into the strategic areas by a 27% change year over year. Residing at 73% of our MDF spend last year went into the strategic areas. In Q1 of this year, it's already increased to 80%. You will see a continual shift in dollars in around the investments we can make, whether they be headcount, whether they be demand generation activities, funding for customer seminars that help drive in our core areas. Our strategy is very clear here with these two programs and with our growth incentives. Align with us, participate with us, take advantage of the resources and the programs, and you will see significant increases in your profitability with Avaya. Now I want to move to what I call really the most important of our initiatives and our objectives and priorities for this year. And it is really our services strategy. Todd Johnstone will be speaking with you tomorrow about elaborating a little bit further about really the challenges we're facing, our perspectives, and what we collectively need to do. I'll stress right at the onset, we are going to move cautiously and in a calculated fashion here. We all have too much to lose in terms of our service enablement and our relationship with customers to not get this right. So don't expect this change to be immediate, but the more that we can be transparent and share our direction, and quite honestly the perspective we have, the better we're collectively going to be prepared to tackle it. You know, I want to start with a quote that I always keep top of mind, and I know Per Paul does and typically shares it at events like this. But Sam Walton of obviously Walmart made a statement years ago and really talked about the dynamics with customers and that there is only one boss, the customer. And he could fire anybody in the company from the chairman on down simply by spending his money somewhere else. And that's the reality of our business. The CIOs that we integrate with, that we talk to from the Executive Advisory Council that we just had last week in Florida, are sharing a very common theme. They need to deliver business outcomes. And as a function of that, they're shifting their budgets from one department to the other, and they're shifting their vendor alliances from those that are tactical to those that are strategic. We want to be the budget area that's growing. We want to be the strategic vendor, not the infrastructure, not the plumbing that we've seen decline in relevance and significance in a lot of enterprises. And services plays a critical role in achieving this objective. It's really moving, if you will, at a macro scale from break-fix business, from metal cabinets and telecoms rooms, to services that are delivered in software. And the services themselves are really moving from being reactive to predictive to proactive. The days of human beings sitting in front of large screens watching customer environments blink red and then placing trouble tickets with our advisory center and dispatching text to change line cards is a remnant of the past. We recognize we have a lot of customers like that today, and quite frankly, we need to modernize them. But we also have to look towards the future and what the customers we're going to be selling to 2 years from now are going to be demanding. And they're going to be demanding services that are not wrapped around the product, but integrated into it. Gary's going to talk a little bit about how services is one of the areas where we focus on in terms of features and functionality. And with our advanced support capabilities and intelligent systems being built into the product, we simply need those integrated into the services continuum and not left at the side of a proposal because the customer didn't want to invest in that area. Creating customer uptime is going to be the absolute goal here, and we need to achieve that as a collective organization. So we really need to be shifting from the decision-making that's happening in telecoms today, and I know how some of those conversations go. My budget was cut, I need to reduce some of my maintenance costs, and ultimately we see a commoditization of our services revenue. We're going to look at our program and how it's actually driven some of that commoditization and shift back to true value add and to services that can differentiate us and our partner community. One of the challenges we have today is that we have 30 to 40 outages, outright customer down situations per day. 80% of those downs are on legacy equipment. They're on equipment that quite frankly was designed in such a great way that it just doesn't fail. But the days have come where it's starting to. Whether it be power supplies or memory, that technology is starting to fail. And every day we leave it at a customer, at a strategic customer site, is another day we risk losing that customer. And services and how we deliver it to market, how we price it, is a key part of that. So upgrading our customers, modernizing their base, is going to be an integral part of our overall services strategy, and something, again, we need to thoughtfully move through. So Todd is going to work through this, but I want to stress a couple points. We are going to go slow to go fast. We are going to keep you top of mind, and not just your margin interest, but your also long-term success with the customers that we want to mutually sell to. We will work together here, and we will succeed. Now, we heard cloud a lot in Pierre Paul's talk, and our goal, plain and simply put, is to be the market leader in enabling and delivering public and private cloud services to the market. We have the technology to do it. That has never been an issue. We virtualized all of our core suites, and what is not virtualized today will be within the next 12 months. Our challenge is how we take our core technology and we enable these new cloud services with you through a variety of mechanisms. Really what we're going to do here is break into 3 specific offers with 4 go-to-market movements, if you will, with our partner community. The first is around private cloud. So these are basically customers that say, I need to move to a pay-as-I-go model, to an OpEx model, to a private cloud model, whatever term they use. What they want to do is essentially take some of the management of this infrastructure and provide it to a third party. Now, for people in this room that are delivering managed services, that's not new news. You've been doing that for numerous years, and it's become a strategic selling asset when dealing with customers. What is new is it's called cloud. What is new is based on different technology, on virtualized software. It needs to sit in virtualized environments and data centers and not in metal cabinets on site. So private cloud is perhaps one of the greatest opportunities. We've created our own offer here, and we've had numerous partners resell it. Joe will talk about it a little bit later. This is an extremely fast-growing part of our business, but we don't want to do this instead of you. We want to do it with you. And to do that, we want to make private cloud abilities and help you build them a key priority of ours. We've worked with several partners already and have accomplished this, but I need to be able to scale out to all the partners in this room who have an interest, have a desire, and have a strategic intent to be managed cloud providers yourselves. And we will help you, and you have our commitment to do that. For those that don't want to put either the capital investment or want to be in the business of actually managing and operating services, we will create public offerings that you can sell. They're going to be in the areas of UC and CC, in automated chat, in messaging, and even in the Avaya engagement development platform will be made available to you via cloud offerings. These will be offerings where you sell and are paid a commission or an agency fee for doing those. Put them on your paper, put them on our paper. It'll work a lot like we do with services today. So for our partners to win here, we think we have to add this delivery capability, this delivery option into your portfolio, and this is the year we're going to make that happen. And counting on Joe and his entire team to work with this audience of people and get these services and these opportunities up and alive in this fiscal year. Now, I talked about ease of doing business, how, it was really an overwhelming feat as we started getting into it, looking at all the projects involved in trying to improve our business here. And it really has been a massive challenge trying to unravel almost a decade or more of systems and processes, and I won't bore you with all the details of the various SAP boxes about how this all came together to promote the commerce. And we've had to make significant changes. We've done it in some areas, as you can see from the chart here. In some key areas we have moved from weeks to days. And one common ingredient has been there, trying to avoid the special bid process, using promotions, and we're going to make those better and more creative and ultimately more impactful to make customers shift to modernized technology. But the areas where we clearly have work to do, and we will prioritize this year, is accelerating commerce in the areas of renewals on the services side and contracts, especially on the professional services. These are 2 areas where I still know there's a lot of partner pain that we will fix this year. We've got a better handle, we've got better resources committed to it, and we've got a strategy that on paper looks sound. But we'll be keeping on it from the channel side to make sure we're achieving it. Mid-market is perhaps our biggest success story, and I believe Chris will talk about this a little bit more. But the biggest complaint we heard from our mid-market partners is you've got greatest technology, customers love it, but it just takes too long. I can get done with competitors in minutes what it takes you, Avaya, to do in 2 days. And we're on a path. From now we're in hours, and we can get to minutes, and we're going to do that within the next few quarters. I also want to stress that your feedback in this area is invaluable. Sometimes you may perceive it to be complaining and whining. We don't consider it to be that. We need the frank and constructive feedback to tell us where we're not doing well, where we're hurting your commerce, and quite frankly, how we could get better by improving our commerce engines. So for this year, we're going to keep focused on 4 things. And I'll look forward to coming back here next year, again outside of hurricane season, and talking about what we've accomplished in these areas. But it's grow through you, our partners. It's aligning around our services strategies. It's capitalizing on the cloud, and it's accelerating commerce. I appreciate there's a lot of change, especially for those partners that have been through us with the thick and thin, have seen recessions, have seen a lot of changes, have been with Nortel and seen the integration and the challenges. And we appreciate your commitment, we appreciate your partnership, but we are making the steps in the right direction, and these will pay dividends. And in fact, they're paying dividends for partners today. So the partners who are aligning with us around our strategic areas, taking advantage of the Avaya Connect program, taking advantage of Grow Right, are growing triple digits. In the US, those partners and their strategic parts of their business grew at 106%. In Canada, 232%. And in Central and South America, at an amazing 318%. This is all white space. It's greenfield. There are areas that can help you accelerate your business with Avaya, and we want to make sure that we are giving you the support to do that. This demonstrates that the opportunity is here today. We're putting our money where our mouth is, and we're having partners succeed. We just need more, or all of you, to be part of that category next year. So I want to leave you with some simple messages here. First of all, Avaya has never, ever been more committed to its channel partners. If there was ever any debate as to whether we need you, let me dispel that notion immediately. We require the reach to go into the new markets, to reach the new decision makers, and ultimately deliver the value. We don't live in a homogeneous single vendor world. In fact, that's Avaya's greatest strength. We aren't telling the customers, you can do it any way you want as long as it's all only on our technology. We integrate with other vendors. We have a strong ecosystem. Joe Manuel will talk about big friends that we're working very aggressively with. Our platforms are designed to be open and extensible. We encourage working with other vendors to make our solutions stronger. And our channel is the secret ingredient in making that happen. Secondly, I want to understand the opportunity that you guys have, that you can make money in greater volumes and faster than you ever have before, but you can't do it in the old way. The old ways simply have not allowed Avaya to grow. They've, in fact, in some cases, prevented your own businesses from growing. So the third point is alignment is key. Understand where our focus is. We're going to be very clear and very consistent on it. And if you align your businesses to it, you'll see the growth there as well. And finally, recognize the speed of change. You heard Pierre Paul again talk about how much is occurring in the industry. It's imperative that we recognize it, but even more imperative that we move quickly. We don't have another fiscal year to get some of these areas correct, like cloud, like our services alignment, and like focus on the strategic products. I want to thank you all for your partnership, your commitment to Avaya. I wish you all the best in FY15. Engage in this conference, have the conversations here, and get every penny's worth out of your time and your investment you've made here. Thanks a lot.